Hello, scrappers, recyclers, and investors. Welcome to Shark Scrapper Live, where we talk about the precious metals market, the industrial metals market, and stocks of companies that are in the orbit of scrapping and recycling. It is great to be here. I missed you all a lot last week. Sorry about the way that turned out. We are going to get right into things today. I hope you all had a great 2 weeks. Welcome. Cruiser Mac, I think you were first here. Wait a minute. Yeah, Cruiser, you were first at 12:27. Talk about not wanting to miss anything. And JR Cat came in not too long after you. So welcome, guys. Electronic Scrapper, Scrapping Irish, See You Scrapping. Hey, Roger. George Richardson, great to have you all here. It is awesome. Bush Dog, welcome. Hope you're having a great weekend and looking forward to another great week ahead to kick some booty. All right. We are going to jump right into things. But before we do, I do have another announcement. I'm going to make it a few more times just so that people are not caught off guard. But next week, I will not be live again. The reason is, this is really exciting. My dad, he's 93 years old. He still works full-time for the state of Maryland, Department of Natural Resources, and he is being awarded an honorable PhD by Frostburg State. It's part of the University of Maryland system, for the work that he's been doing with trying to deal with the acid runoff from the old coal mines that are out in Western Maryland and the coal ash from the coal industry. So just an amazing thing that's going to happen. And I'm going to be at the ceremony and events with my dad next week. So I apologize that we will not have a live stream next week, but I think you all can understand this is a pretty big thing. So plus, I haven't seen my dad in a while, so it'll be great to see him. And I'm going to get to see my brother, and my brother's bald as a billiard ball, so, you know, I get to rub it in a little bit. Cruiser Mac, I think he's going to retire when he dies. He just loves to work, you know, and I feel very much the same way. I love working too, so I think I picked up some of those genes. That you know, it's a good thing. Now, I know I didn't pick up his smarts. I mean, my dad is freaking brilliant, right? But I muddle through the best I can. JR Katz, he's going to be at Fort Meade. Oh, okay, cool. Yeah, I know Fort Meade really well. Yep. We're going to be out west, Frostburg. Okay, let's get right into what's going on with there we go. Let's get right into what's going on with gold. And we're going to jump right over here to the gold charts. As you all know, I use the APMEX chart for this conversation. I have used APMEX to buy and sell physical gold and silver. Hey, Mike, great to see you here, man. I'm not paid, don't get any advertising. I just happen to think APMEX is one of those companies that, you know, is a good company to do business with. So plus I like these charts. All right, so we can see that gold is down for the 24-hour. You all know that I don't get too excited about these short-term fluctuations. If we look at the 3-day, we see that gold is still down 0.2%. At the 1-week point, gold is down 0.19%. I mean, these are not, you know, huge drops. And if you look at here, if we take and look at this, you know, you take from where the week started, and if you want to draw a straight line across, you know, and then here's where we're down a little bit. But if you draw the straight line across, you see that gold was trying to climb for the week, but then dropped off near the end of the week. So in the 1 month, here we are for the 1 month, and we see that gold is up 0.44%, which again, it's not huge. You know, it's it's compared to the 4% rise over the 3-month period or the quarter. And then if we look at the year, we can see that gold is up 8%. But I think the real question that a lot of us have been asking is, why is it down here? If you look at the 1 week and going into the month, you say, well, why would it be going down? We've got this potential, we've got things going on in the market right now that should be driving investors into gold and silver, and yet it's kind of coming down. The general sense is that that a lot of the movement into gold as safe havens has been taking place, and there's sort of when gold crossed that $2,000 an ounce mark, that sort of set a new bar, and so they don't want to see, they being investors and such, don't want to see it drop down below that. So they that floor is kind of holding gold up a little bit. But because investors have already moved in quite a bit and they're busy trying to digest all of these conflicting signals about, what's going on with the U.S. economy versus inflation versus possible recession versus, there's just a lot of conflicting data going on right now. So that's why we saw gold kind of come down a little bit, but really not a whole lot. Hey, Earl, great to see you here, man. Scrap it all. Great to have you here. Now, we do have here in the United States, we have this looming really ugliness of a possible default if the president and Congress and the Senate don't figure out what's going to happen with the debt ceiling. If the U.S. busts that debt ceiling, man, all bets are off. There's no telling what's going to happen. It's never happened before in the history of the United States. And I'm not going to get into politics here. That's not what we're about. But let's just say that if the U.S. does bust through this default, it's going to get really ugly, and gold is probably going to, move a bit more. So, if you've got gold and you're thinking about selling it, you might want to wait and see what happens with what's going on with the debt ceiling. Now, again, I got to remind you all, I'm not a financial advisor or counselor or, in any way trained or certified to provide financial advice. These are just my observations of what's happening in these markets. And we're talking about them mostly because we want to think about what's going to happen to the scrap that we're selling, our e-waste and stuff. And if you remember a while back, Chris from boardsort.com said that, he has to see things change and sustain that change over a longer period before he's comfortable making changes in what they offer when they buy and sell. So this short-term kind of almost drop a little bit in gold, probably not going to have a major impact on what boardsort.com or other buyers of e-waste are offering. So, if you're getting ready to sell some stuff, I would say go ahead and sell it. I'm getting ready to sell it. I got a box out in the Sharkmobile right now to take over to the USPS, the UPS place, the UPS folks tomorrow morning. So, but then again, I have to keep selling a certain amount of my material because I have costs that I have to cover. Rent. I've got rent on the facility. I've got insurance payments that have to get made, utility payments, all those kind of things. So I have to keep cash flowing. So I'm always selling stuff. Whereas if you are a hobbyist, you can, if you want, hold on to material and wait for the prices to go up some before you make that. And then, of course, the balance that I do is I'll save a certain amount of some materials behind. So I'll generally save about 10% of goods, things like, number one, copper and bare bright, higher end type boards and things. As long as I'm making my cash flow, I don't mind keeping some of that stuff as a strategic reserve to get some more money there near the end. JR Cat says, never sell gold or silver. Hold. That's just fine with me. Yeah, I'm not spending it on haircuts. The one thing I would say, JR, a cat, and I'm sure you don't mean never sell gold or silver, because if you don't sell it, it doesn't have any value to you. You only really get your money out of gold and silver when you sell the gold or silver, right? So, I get it. You're saying, or at least I believe that what you're saying is hold it for as long as you can, because it's going to keep going up. And, if we look at, so for instance, if we come over here and we look at the long-term trend of gold, yeah, there's you can see from way back in the mid 90s when it was 330 an ounce. Now we're over 2,000 an ounce. And even if you look at just this short run from, say, 2020 on, you can see gold has these nice plateaus that it's at right now, but it'll probably start climbing again at some point. So, yeah, I would say hold it if you can. And if you do have to sell in order to meet cash flow, sell what you need to make your cash flow, but always try to keep some behind for a rainy day. Yeah, a good hedge for inflation, and that's what a lot of that's what a lot of investors do. They buy physical gold and silver as a hedge against inflation. And this is a good point. I don't talk about this a lot, but I think we ought to mention it, and that is that when I'm talking about gold and silver buying and stuff, I'm talking about either the things that we deal with in scrapping and recycling, like boards, e-waste boards, things that have gold content in them, or I'm talking about physical rounds, bars, coins. I do not ever recommend buying paper gold. To me, those are just a scam. And I've seen reports where they have talked about the number of the quote unquote gold certificates far exceeds what's actually in banks and reserves and things that you could actually get hold of that gold. So with me, when it comes to gold and silver, if I'm not actually holding it, then I don't own it. So I don't believe in paper gold, certificate gold. I don't believe in these places that say, yeah, you bought this bullion and we put it in a cage for you and it's yours and you can have it whenever you want, but you don't really have it in your hands. To me, those are just, badness waiting to happen. Now, if you own so much gold that you're nervous about somebody breaking into your house and getting after your gold and stuff like that, well, put it in a safe deposit box or a good secure location. I still, for me, it's about actually being able to hold my physical gold and silver rather than have pieces of paper that say that I have gold and silver. Let's see. Urban Prospector, welcome to the show. Urban Prospector is saying, since I'm just doing it as a hobby, if I sell it would probably be only 50% of what I have each time. Yeah, good point. Good. That's a good way to go, right? Again, if you don't need the money, then yeah, let's see if it can go up. I often laugh about if something was to happen and I was to be dead tomorrow, would my wife, would my kids have any idea the value of the stuff that I'm leaving behind? I try to tell them sometimes, but the wife just doesn't listen sometimes. Bush Dog is saying it's a good time to buy silver. Well, I wasn't planning on talking silver, but we're here. So here, wait a minute. Let's pop on over. Let's go ahead and take a quick look at silver. So what is silver right now? $20.59 an ounce. Yeah, that's not a bad price. Here, let's look at the 24-hour. So it's down a little bit. Oh, wait a minute. Yeah, here, let's refresh real quick. Make sure I've got the latest, greatest. So here is our 24-hour, just refreshed from the AppMax site, 24.20. So I like to buy silver when it's, below 25. So this is getting a little bit high for me to buy silver, but it's still within the threshold range for me to buy silver right now. So yeah, if you're interested in silver, go for it. Grass cutter Tim, Palmer, Tim, how you doing, man? Great to have you here, bud. All right, so great discussion there, and some good comments on gold and what's going on out there. And we're gonna have to see what's playing out as this moves forward. All right, now it is time for the safety note of the week, and this one might take some of you a little bit off guard, but the safety note of the week is slow down. Just slow down a little bit. Here's what I mean. Most of you that have been in a manufacturing or a construction site have been told that you don't run on the manufacturing floor at the construction site. There are obvious times, like if something's going to blow up or there's a fire or something like that, when you need to run. But, generally speaking, in a standard, hi, Simon. How's it going, man? Ed Wass, welcome. Great to have you here. Most times in a manufacturing or industrial setting, you don't run because you risk either running into something that could hurt you, running into another person, slipping and falling, and those kind of things, right? So I like to extend that in our world of scrapping. I like to extend that to, it's all right to move quickly, but do so purposely and understand the environment around you as you move quickly. I have been out street scrapping and seen some of these folks just blasting down the streets because it's like they got to get there before everybody else, because by God, if they don't get that vacuum cleaner or that bed spring frame or, whatever junk is sitting on the side of the road, then, that's the end of the world for them. So now the problem is, in most, at least in the areas where I street scrap, these are residential neighborhoods. The streets are not huge. And if you go blasting down the street much faster than, speed limits, you risk running into somebody, running into cars, hitting kids, any number of things that can go wrong. So I would say slow down just a little bit. Pay attention to what's going on around you. I was actually coming back this week. I had one of those instances where your training kicks in and you do the right thing and you say to yourself, "Oh man, I'm so glad." So I'm coming up the street and I saw a ball roll out from between some parked cars, and I stopped. And sure enough, a little kid came running out, a little squirt. I couldn't see him between the parked cars, but I tell you what, man, every time I see a ball or a toy come rolling out from behind a parked car, I stop, because 90% of the time there's a little chunkin coming out behind it, running after it. And, most of them don't pay attention. Now that might be called Darwinism to some of you, but, it's a reality. So, don't drive too fast. Don't run around your work environment. And, just slow down a little bit. Yeah, scrap it all. I agree, man. Yeah, scrap it all. Saying that's one of his biggest fears is running over a kid. I hear you. And dogs, right? You got sometimes the dogs get loose and are running around the neighborhood, and you worry about them. Of course, down here in Florida, you got to worry about running over gators. Not that we really worry about running over the gator, but it can mess up your car. Okay, so that's our safety note for the week. We are now on to our industrial metals. Our industrial metal for this week, we're talking copper. I saw some comments come through. A number of folks were talking about copper and was the copper market being manipulated? So I thought we would just take a look at copper and chat about that for a while, because there's some kind of head scratching stuff going on with copper right now. So let's jump over here. Here's our chart on copper. Again, for these charts, I use the Kitco historical charts. I like these because we go all the way from the 24 through the 5-year kind of look at what's going on. Yeah, yeah, Cruiser Mac, that's a possibility. You know, the last thing you want is an angry, wounded gator to deal with. And scrap it all. Yeah, happy Mother's Day out there for everybody. And you know, that's the other reason why you don't want to hit a kid, right? Because you don't want an angry mom. They're worse than gators. Okay, so yeah, Cruiser said oh, wait a minute. Well, you got to tell us more, man. Oops, here we are. Hey, John, welcome, man. Cruiser, you're going to have to follow up with that comment. Copper research this week, it did not end well. All right, come on, tell us more. All right, so we see that on the 24-hour that copper was down 0.0027. It's at 3.7375 US dollar per pound. We look at the 30-day and it's dropping. I mean, look at that. That's yeah, that's not what we like to see. And there's Cruiser has given us some. Hey, Dean, welcome. So Cruiser is giving us some definitive notes on what happened with copper. He took it in and it went down 20 cents a pound. Yeah. Dean's getting, let's see, Dean says he's getting 310 for Bear Bright right now. And what did we say it was? 3.73. So you're getting a good price relative to spot. So that's pretty good. Now, as we look at 60 days, so for 2 months, copper is also down. It had a bit of a climb and then it went down again. Our 6-month copper spot. You know, let's draw this line. We started here, and for the 6-month, it's not much going. I mean, it's kind of flat, right? It climbed and then it dropped off again, and you know, you got to say, well, what? I don't understand why this is going on. And if we look at the 1 year, we see that we had this big dip. It climbed and then it's been falling off again. And the 5-year, here that fall off, when we look at a 5-year chart like this, and we see a signature that is this clear, then you know that something's going on, and you got to scratch your head and like, well, what in the world is happening? Well, I always like to go back to inventory and say, well, you know, what's going on with inventory? Well, now, wait a minute. This doesn't make any sense. Here's the 30-day COMEX copper warehouse stocks. They climbed and then went flat. So why would the prices go down? Here's the 60-day COMEX inventory. They climbed and went flat. And yeah, you know, you would say to yourself, okay, wait a minute. Yeah, it went up and then flat. So yeah, that would kind of suggest that the prices would go down, right? Or they would stabilize. But you got to be saying to yourself, why is copper inventory going up? You know, I mean, we should have all this talk about copper being that essential metal that the green industry needs and the electrification needs. And why is the warehouse stocks going up and the prices going down? So let's see here. 30-day inventory is climbing. Now this is kind of telling. 60-day London Metal Exchange, it dropped, stabilized, and then climbed again. So we would have expected to see the copper prices going up as the inventory was dropping, and we saw the prices go up. But the inventory is climbing here, and so prices would drop or maybe go stable, and they're dropping. So here's the 6-month metal exchange inventory, and if we look at this, we see if we don't make the line so big, you chuckhead, we can see that the inventory is down just a little bit from 6 months ago, but it's starting to climb back up again. And if we look at the 1 year, now the 1 year overall, what we see is that the inventories are pretty low. And there I went with the great big line again. But here is this, here we see the inventories are starting to pick up again a little bit. And again, we go back to why, what in the world? That's not what I meant to do. Why is this happening? And here, you know, with the 5 year, I love to look at these 5 year charts because here we see we had like this base level and we dipped below that base level. Let's try that again with a smaller line so it's clear. We dipped below that base level and now we're starting to get back up. And so it makes you wonder if we're going to see another decrease moving forward or if it's going to keep climbing. If you connect these peaks, overall, you see that peak inventory is still bouncing as it tries to climb. So it's like it could probably hit this thing and then come down again. But again, this isn't explaining why we're seeing this go on. Well, here's what I came up with for my research. And I've been looking at this, you know, digging around. This article that you're going to see is one of many that I have, that I found that essentially says the same thing. And, you know, it's basically that the Chinese demand has not come on as strong as people were thinking it would. So right now, the reason that we're seeing the copper prices come down and the inventories come up is because China is not using as much copper as you would expect them to use. So, you know, that kind of says it all in a nutshell right there, right? The demand here in the United States will keep climbing as we electrify and use more copper. But for copper prices to change enough for us to see some good price increases, we need China to really start doing the same thing and increasing their demand. So I think until we start to see articles and until we start to see movement in China for their production ramping up, we should not expect to see copper rise a whole lot. So I honestly believe, I truly believe that the long-term play for copper is that it's going to increase. And what we're seeing right now is, you know, a momentary fluctuation within that longer term trend. So I maintain that the thing to do is build up your copper inventory. So I'd like to see what you all think. Are you going to work on building up an inventory of your copper scrap in whatever form you like to keep it, bare bright, number one, number two, insulated copper wire, or are you going to keep selling, and keep the cash moving? So Mr. Matthews, welcome Ian. Great to have you here. He says, I'm sitting on, is that 101 pounds of copper or 10 pounds of copper and you hit an extra L? That's a lot of copper, man. Let's see, who else? What are you all planning on doing with your copper? So Simon says he started to scrap transformers. Okay. Transformers can be a good source of copper. And of course, as some people have noted here, that there can also be Chinesium in the copper. So, and Ian is saying that's 10 pounds of copper. Okay, gotcha. Hey, you build it up where you can, right? You start at 10 and you start moving on. I think that you may have, a couple 100 pounds of copper buried somewhere in your shed that you've forgotten about somewhere. Let's see. What do we got going on here? Simon says he is collecting aluminum and copper till August. Okay. And Scrap It All says he stacks copper for a year and then I sell if the prices aren't too low. Okay. Yep. That's yeah, that way you've got a good, nice load of it and you probably get a little better price because you're bringing in quite a bit of it. Makes good sense. Mike is joking around with us because I know that's what he does not do. So, you know, what you need to think about whenever you see a comment from Mike is do exactly the opposite. Cruiser Max says he's disillusioned and going to sell it all at shred. Oh, man. And see you scrapping. Yeah, Roger, you're in a similar boat to me, right? You've got the shop. You've got to meet your cash flow demands. You got to pay the rent. You got to pay the power bills. You got to, you know, pay the truck and the insurance and stuff like that. So you got to keep cash moving, and that's understandable. You know, I go through the drill every month. You got to pay the bills, and then, you know, are we able to keep anything aside for, you know, the future? So yeah, that's part of the game. It's the difference between doing it for business and doing it as a hobby. And Mike says he's very proud of Cruiser for his disillusionment and throwing it in with the shred. I do want to make sure that a lot of you know that Mike and Cruiser are joking right now. They don't throw their copper in the shred, trust me. Scrap It All, I bought it 600 pounds last year and they gave me 20 cents more per pound than they would have quoted because of the volume I brought in. Yeah, there you go. It's exactly right. Some of you know about 2 weeks ago, I had a Gaylord box with about 500 pounds of green small socket motherboards of various types. I had a buyer up in Atlanta, which is almost 6 hours away, that was offering me $209 a pound. The local yard that I normally sell to was only offering $140 a pound. I called the buyer and I said, hey, look, you know, I'm just going to be flat out honest with you. I got about 500 pounds of this stuff. I'd rather not go to Atlanta, but if you're only going to pay me 130, 140, I forget which one it was, you know, it's worth me to drive to Atlanta. And he said, well, how about $2 a pound? I said, got it. Works for me. So we sold it locally and I saved the trip up to Atlanta. So anytime you can build up a large quantity of material, you're probably going to get a better price per pound because, you know, it makes it better for your yard. Dean says he keeps mine till I have a few hundred pounds, then I bring it in. Thanks to Sharky, I don't waste my time. Yeah, all right. You know, I hear you, Dean. It's you know, it's a tough decision to make sometimes if you're going to strip or not strip. And I always like to do those return on investment videos because I'm doing that all the time for myself to decide what I'm going to spend my time on. And so I like sharing those videos out so people can make informed decisions. You may still decide to go ahead and scrap the stuff because you're a hobbyist and time doesn't matter, but at least you understand, you know, the differences. And sometimes what I really found this was interesting is like sometimes I even lost money by spending time to process different things. Always kind of interesting. Simon Keltmaster, hey guys, I found out that Mitsubishi Materials have a refining facility in the Netherlands. Oh, okay. Cool. Very cool. All righty. Let's see. John, go ahead and ask the question, man. You know, we'll see. We'll see what it is. If we can answer it, we'll be happy to answer it. We've still got some time. We're still moving along here. And all right, so let's we're going to see what those questions come up. Feel free to go ahead and drop your comments on copper, and we are going to move into our business note of the week. The business note of the week is kind of a little bit related to what we're talking about, and that is how many of you actually do conscious efforts to continue your education and your skills development. And I don't just mean, experience-based stuff, which is fine. I mean, we all learn a lot just through the experiences of taking things apart and such. But how many of you take the time to try to get some more education to help you improve what you're doing as a business? So, examples of this might be courses or training opportunities, education opportunities from your local small business administration about managing your books, or your financial education, understanding what those credit cards are really costing you. Should you be using your credit cards to run your business? Are there other ways to get the capital that you need? Another example is there's here in the United States, they have international in their name, so maybe they're international. The International Scrap Recycling group, and there's courses that they offer on safety and materials and things of that nature. So there is a lot of training that's out there. Much of it is free. Some of it has nominal costs associated with it. But how many of you actually take the time to educate yourself or try to improve skills that you have? Now, another example of education and skills is for those of you that have YouTube channels. Have you taken any time to look at the plethora of sources that are out there to help you with things like storytelling, improving your thumbnails, improving the way you edit videos, the graphical arts aspect of your thumbnails and your videos and such? There's just a whole lot of training that's available. The one thing that I would caution everybody is you get what you pay for a lot of times. So you got to be careful when people throw stuff up on YouTube for free and say, this is what you ought to do. Maybe, go ahead and, watch those videos. And if you see that there's conflicting evidence, or it's kind of like, that's not making a whole lot of sense, do some additional research on it before you just adopt that as the education that makes sense. Let's see, how many of you out there are doing some of this training and education? I'm going to go back here and look through some of these notes. And while we're looking at some of these notes, it looks like we're getting the questions from John. So John's first question was, is most gold and silver and palladium and platinum, et cetera, actually smelted or refined outside the United States? I don't know the answer to that. I really don't. I know that for a long time, the United States was exporting a lot of its e-waste to other countries. Then we learned about what was happening with it in those countries. And so a lot of things went in place to prevent that from happening, or at least you had to start proving that the company that you were exporting it to was not processing it in a environmentally or human hazardous method, as happens in a lot of these third world countries. I don't know what the numbers are right now, but I do know that in general, e-waste is not recycled. I mean, there's just, the numbers are staggering, the amount of e-waste that does not get recycled, much less recycled, properly or improperly. So there's still a lot of it that needs to be recycled. The second question, if number one is yes, then how has dramatic increase in shipping prices everywhere impacted this? Again, John, that's another one of those that, because we don't know for certain where, how much of it has been exported, but here's one of the things that I would say would play. If the United States is exporting a lot of its material over to, say, China or Indonesia, that westbound load tends to be empty or emptier. There historically has always been full containers coming to the United States, empty containers going back in the other direction. So if the United States is exporting a lot of its e-waste still, probably the shipping costs have not been as bad as you might think. because while the inbound shipping costs would definitely be, high, outbound shipping costs may not be as bad because there's a lot of empty containers going in that direction. And so a lot of the shipping companies will offer reduced rates rather than ship empty containers in the other direction. And number 3, where was it? Okay, here we are, number 3. And does this create an opportunity to start smelting, refining some of the above metals here in the United States? Now, so first of all, John, let's make sure that we're talking using the right language here. So smelting is when precious metals are recovered from ore. Refining can encompass all aspects of refining the metal out of the scrap and e-waste. So, the actual smelting of the materials, that's a mining question. And we're not, mining goes on all around the world. So is there an opportunity to do a better job of refining those precious metals and materials here in the United States? Yes, absolutely. And the main reason for that is that there's a lot of folks that, have stopped shipping the material overseas because they see what happens when it goes overseas. That means that that material is staying here in the United States. Again, I don't know what the exact numbers are, but we need to do a better job here in the United States of dealing with our e-waste ourselves. All right, now let's see. I got to get caught up with the comments and questions here. So we were talking about training and have you been spending time with that? And Bush Dog says he's been spending more time on thumbnails and editing and camera work and explaining the how-to. Good. Have you been? What kind of courses or training are you getting? I use the software I use is from TechSmith. It's called Camtasia, and they have training that they make available for using their software and their editing tools. And I also do a lot of thumbnail editing with Canva, and they also offer online training for how to properly or better use the software that they provide as well. So that's a good one. Poozmate says, I usually watch many videos on a topic to see if there are discrepancies. Absolutely. As a scientist and engineer, when I was doing research for things like my thesis and such, I would do a lot of research. I'd do a lot of reading. In fact, it's funny, when earlier this week, I scrapped out one of those microfiche readers, and I would be reading these reports, and it's interesting, how when you find conflicting information, and then you have to go back and say, well, why is it conflicting? What was it that was, that made one set of results different from another? And frequently the answers are all over the board, but you don't know that until you actually do the research. And what's funny is when you start really digging into it, then sometimes it's understandable. It's like, oh, because their subset of data came from this collection, and if they had included this other set of data, then they would have gotten a result that was closer to what this other report came up with. So, for instance, I recently read some reports that were talking about hazardous waste, our printed circuit boards hazardous waste. And this deals with the definition of hazardous waste here in the United States. And what I found, let's see, I may have even written this down. Let's see real quick. What I found a couple of reports where they had, of course, because I would like to find it right now, I can't. So I'm not going to try to keep looking for it. But what I discovered was that there were, I read 3 different papers where they took printed circuit boards, they ground them up, they ran them through acid to recover everything, and then once they had it all up in solution, they started dropping out the different metals and materials. And no surprise, they found elevated levels of cadmium and lead. And so by definition, they declared, they said that the amount of cadmium and lead that they recovered would easily make this a hazardous material. Now, of course, remember, this is, it was all, they were looking at the total content of the material, not the way we would be exposed to it as scrappers. But each one of those reports also pointed out that the numbers will vary significantly depending on the age of the boards and where the boards were recovered from. So I thought it was very interesting that these researchers actually took the trouble to explain that their data could be skewed because of the availability of the raw material, the printed circuit boards that they used. Let's see, Scrap It All says he does research on how to improve his videos. He watches a lot of scrappers to help learn how to do things better. And I've learned most of what I know about e-waste because of your video, Shark. Well, thank you, Scrap It All. I appreciate that. There's lots of good material out there for learning how to scrap. And you are spot on by watching a lot of people's videos, because there's a lot of good content out there on how to scrap things out. And just because one way of scrapping works for one person doesn't mean it's going to work for everybody, right? So let's see. Yeah, the problem is if something is trending, you get a lot of copycats who just spout out the same old. Yeah, that's very true, Pooh's mate. You get a lot of people that are just throwing the same stuff out there just because they want to get in on the trend. And they haven't done any real research themselves to determine if what they're saying is accurate or not. So Big Country Scrapper, welcome. Great to have you here. Homer's Reluctant Odyssey, great to have you here. Let's see. Bush Dog, I watched a bunch of creator help channels and just trial and error. You learn a lot from trial and error. And one of the things that I like to really push is there's a difference between book knowledge and experience. I believe that it's important to have the theoretical or the book knowledge because that way you know what to expect when you start doing something, and you can avoid some dangerous things as you are learning from experience. So if somebody didn't properly research the hazard of using nitric acid, for instance, they could easily kill themselves. So it's very important that a person have a theoretical or a book knowledge of what's going to happen when you put e-waste in aqua regia or various acids. But nothing beats experience. So once you have the book knowledge to apply the appropriate safety cautions, then you go and test refining some of these metals. And then once you've done that a few times and you've built up some expertise, then if you feel like you are competent to share that knowledge with other people, then you go for it, right? So that's it's important to have that mix of both theoretical knowledge and hands-on experience. At least I believe it is. Let's see, Bushdog goes on to say, I do a lot of my filming and editing on a 64 gigabyte iPhone 8. Yeah, okay, yeah. So and one tip I can give, if you film with a smartphone, take it out. Okay, yeah. Well, is that because it overheats or because you forget to take it out of the case and you can't see anything from it? I'm having a lot of trouble with my new GoPro overheating. And so I'm thinking about maybe taking it out of the protective case when I'm recording in the shark cage, because man, it has been shutting down due to overheating already. And we haven't even gotten into the really hot days around here. All right, now let us move on to the stock discussions of the day. So one of the things that I thought was interesting this week's edition of the Value Line Investment Survey. Remember, these folks do not take any advertising, so all of the information they present is just raw data and analysis of actual raw data. It's what I like about using them. Of course, they're very expensive, but that's okay because I get a lot of good information that I use and share with all of you. The industries that they were talking about in this week's issue was automotive industry, the precision instruments industry, the electric utility industry on the East Coast, the heavy truck and equipment makers, medical supplies, and medical services. Now, the heavy equipment operators included Caterpillar. And I thought it would be interesting to look at Caterpillar because as we talk about what is happening with the investment in infrastructure in the United States and in the mining industry that's going on out around the world, heavy equipment becomes a real issue, right? Is there going to be enough heavy equipment to satisfy everything that needs to be done as we, fix our infrastructure and as mining and such continues? So I thought Caterpillar would be interesting to look at. But remember, I am a boring old dividend investor. So I want to, I want my dividends to be, somewhere at least around 4% if possible. So we're going to jump over and take a look at Caterpillar. And as we look at Caterpillar, what we can see is that they're only offering 2.2% for their dividend yield. Now, this is as of the 12th of May, and that's on $217.25. Holy bajoli. That's some expensive stock. And it's funny. I mean, for us, right? I mean, I'm sitting here, I'm talking about myself here, right? I'm saying that's expensive stock. And there's probably people out there that think, oh yeah, that's no big deal. 217, whatever. Yeah, for me, that's expensive stock. Now, you all know how I like to look at this. I look back at 17 years of cash flow per share, earnings per share, and dividends per share. We can see that they are not qualified by cash flow or earnings per share, but they are qualified on their dividends per share. They have increased their dividends every year for the last 17 years, with the exception of, now we have a problem. My rules are pretty clear. I allow cash flow per share and earnings per share one flat or down year. Dividends per share, I'll allow a flat year, but don't ever take dividends away from me. So this causes me a problem. Now, they're still cooking the books on 23, so maybe they will increase this dividend, and this could become a flat instead of a down year. But yeah, this doesn't make me very happy about Caterpillar. So because I wasn't all that happy about Caterpillar, I thought to myself, all right, what else is out there? Well, in this particular week, we looked at electric utilities, and electric utilities, are really good from a dividend perspective because they tend to pay pretty good dividends and relatively stable. So we go over and we look at Con Ed. So Consolidated Edison at 3.3%. All right, it's kind of close to 4. I'd rather have it 4 or above, but they have been above 4 in the past, and they're a little less expensive at $99.11 a share. But here's what I like about them anyway is they're a div zero. So 17 years of increasing dividends per share with not even any flat years. Now, here's what the folks at the investment research group have to say. They say that the recent stock valuation, most of the good news has been baked in. The company is looking better of late in terms of bottom line growth, and it will remain a beneficiary of New York's transition to green energy future. However, the stock has been trading as if the 6 to 7% share earnings gains over the next 2 years are sustainable longer term. More likely, Con Ed is apt to grow profits at a similar rate to the electric utilities average of 4.5 to 5.5. So if you're into the growth side of things, they're not great. They're not bad. They're not great. But as a dividend play, this is pretty good because it's reasonable dividend and it is solid. They've got a good solid track record. If we look at them graphically, we can see they've had a nice, it's not steep, but it's a good dividend trend. And if you look at their cash flow and their earnings, you can see that they are also on an uptrend, a little bit flaky, but no, huge spikes up and down. And that's what you would expect from a utility company. Now, the other company that I looked at is called Eversource. I looked at Eversource. They're at 3.5%, and they're a little less expensive at 77.72. Plus, look at this. I think this is the first one of these companies we've looked at that was qualified for more than just dividends. So they were qualified for their earnings because they only had this one down year, and they were qualified for their dividends per share. So that, that speaks well to the way the management of that company is doing business. And if we look at that graphically, we can see that, the scale throws it off here a little bit from the dividends, but the dividends, that's up, but the scale makes it look weird just because I've got all these lines on one scale here. So Eversource is another possible player. I'll tell you what the folks, the investment groups have to say about it. Eversource shares may be appealing to utility investors with a longer term leaning. The company has a solid record of delivering shareholder value and possesses superior growth prospects relative to its industry peer group. This issue is likely trading at lower valuation premium than normal, with the dividend yield just 10 basis points above the electric utility median. Eversource is another possibility. Now we're going to look at another company here. We're really doing a lot of companies this week, but you'll see why here in just a minute. This company is called Southern Company. Their interest rate, or their dividend yield is 3.5%, and this is on $74.09. So they are a little more in line, getting even better from a price range for us. They are qualified as a Div 0, so you can see they have had 17 years of increasing their dividends per share. But they've even gone beyond. I mean, they've increased their dividends every year for the last 22 years. So Southern Company is a good company to invest in as a strong dividend player. I'll be honest with you, I'm looking at maybe putting some into Southern. I've had Southern in the past, in fact, let's go down here real quick. So what's interesting about Southern Company, you can see that overall they trend up and they don't have a lot of gyrations. But at one point I took advantage of a dip that they had and made some money. I probably ought to get back into them. Here, if you look at the year-to-year changes, you can see that gold bar, that's their dividend bars. That's solidly above the zero line every year that they go along. So Southern Company, if you're looking for a dividend play, I would suggest taking a look at Southern Company. Again, I want to emphasize that I am not a financial planner. I'm not certified as a financial counselor or advisor in any way, shape, or form. This is just the way I look at stocks and the way I consider things for my personal investments. If you are going to buy any stocks, I recommend that you do your research and, if possible, talk to certified planners and such so that you understand what it's going to do to your taxes and all those other good things that we have to consider. All righty now, let's hit the right button. There we go. We're back here. So Poojmate is asking a good question here. Do you ever look at shares that are selling for less than $1 or a pound? Those are generally referred to as penny stocks. And I had a really bad experience with penny stocks. The problem with penny stocks is usually the companies don't have much of a track record, so you don't really know what you're getting into. And so it's very easy to lose your money there. They're much more speculative than these higher dollar value kind of stocks. So I don't really invest in penny stocks. Now, there are some people that make really good money doing that. And there's all kinds of books that are out there that try to help you figure that out. But because I'm a dividend investor and I take the long-term view, a buy and hold, very rarely do I ever sell. For me, it's all about looking at the long-term history of the dividend trends and payouts from a company. And do I have a good reason to believe that the money I invest in them is going to pay me reasonable money for the long haul with minimal risk? Investing in stocks is risky. So you want to try to mitigate that risk as much as you possibly can. And penny stocks are really risky, so I avoid penny stocks. Cruiser Mac is, good point there, Cruiser. And I think I've made it pretty clear about my feeling on penny stocks. Big Country Scrapper, how do you see the copper market this year? Do you think it will continue to drop, or do I see it going? I see it turning back around and going back up again. So yeah, I'm pretty sure. I'm very confident that we're going to see copper go back up again and continue from there. Okay, a couple of notes before we wrap up this hour. Monday's video is going to be another in my board identification series. It's going to be peripheral boards. I apologize that it took so long for this one to come out. I have shot it and reshot it several times. Those of you that have tried to understand how to grade between, mid-grade and peripheral, and then within peripheral high and low grade, that it can get a little complicated. And I was not happy with the quality of the video the first few times I shot it. I don't mean the visual quality, but just was I getting the point across? So Monday's video is going to be about peripheral boards, and I look forward to your feedback on that video, and hopefully it will provide some help. Actually, I learned a lot when I was making the video and going back and forth with Chris at boardsort.com on technical assistance that he provided while I was putting the video together. So big shout out to Chris at boardsort.com for QCing that video for me and making sure that we were putting out good information for everybody. Yeah, Poos, mate. That's why they're expensive. Okay, the other thing that I do want to remind everybody, I mentioned it at the beginning of the video, and so I'll just put it out again before we wrap up here. No live stream next week. I will be in Western Maryland with my dad while he receives an honorary PhD for the work that he has been doing to reduce the acid mine runoff and deal with the coal ash that has been piled up and left over from a lot of years of burning coal. So I will not be here next week. I'll be watching my dad get an honorary PhD, which is going to be really cool. I'm looking forward to that. All right, everybody, if you have autoplay enabled when I end this stream, it will take you right over to Scrapping Irish's live stream. I look forward to seeing everybody over there. so we can continue the discussion and have some more fun. If I don't see you over there, have a great 2 weeks, and we'll see you in a couple of weeks. All right. Bye, y'all.